Room does exist for the Standing Committee on Public Enterprises to commence business.
Thank you, Clerk. It has been reported that a quorum does exist for the Standing Committee on Public Enterprise to commence business. Those in favor, please say aye. Aye. Those not in favor, please say no. The ayes have it. First, can someone move a motion for us to adopt the agenda, either with a recommendation or adopt it as it is? I move the motion that we adopt the agenda. Any seconder? It has been moved and seconded for us to adopt the agenda as it is. Those in favor, please say aye. Aye. Those not in favor, please say no. Yes. Mr. Chairman and the senior management from Gambia Ports Authority and Gambia Ferry Services, the independent auditors that are with us here since yesterday, the representative from the Auditor General Department, a representative from GPPA, subject matter specialists, honorable colleagues, our able clerks. I greet you all, and I want to really appreciate your coming on board to have this consideration that is slated for today. We really appreciate our cordial relationship. And first, before we proceed further, I would like us to do individual introduction as usual. I think introduction is also very important. Some of our members, as I told you yesterday, are on other engagement. The membership of the committee went up to 9, but as you can see, we are sizable here because some of them are also on other engagement. I will start introducing myself, Honorable Lamin Gpsa, National Assembly Member for Brikama South, Chairman of this particular committee. My vice?
Good afternoon.
And your team to come on board. Mr. Chair, thank you so much for the wonderful introduction. I have seen new faces today. I want to inquire whether they will be responding to some of the queries that will come from the members so that they can also be under oath. But those of you who have taken oath yesterday still remains. But the new ones that are going to be responding, if they are going to be responding, the clerk will come around to administer the oath. They are just here to observe. Okay.
I will tell them always to use the mic. It's live.
Okay. Thank you so much, Mr. Chairman. I want to remind ourselves for the ground rules that are set for these committee operations. That is to put on our mobiles on silence in order to avoid distraction. And I want to remind you also we are on live. So if anybody who is intervening, you can use the mic. Thank you so much. We have the reports that were presented to us yesterday, and we went through it to go to critique it. So like we will start as usual, we'll start with the GPA. I will open the floor for my members to start asking certain questions for clarifications. If that is okay by you, Chairman, we can start with GPA. After then we move to the ferries. Thank you so much.
Okay. Thank you very much, Honorable Chair. Honorable Chairman and Director of GPA. It takes me right to the management letter of the GPA, page 6, under controls issues. Yeah. Yeah. We have some, we need you to clarify to us on the insured, or the issue of insurance certificates on motorbikes and vehicles that staff has taken some loans to secure those things. And going to page 7, the dock workers. Remuneration of dock workers. From our review of dock workers remuneration, and as noted in the prior year report, we observed that payments were done through cash. We are concerned with the high volume of cash transactions and associated risk of fraud and theft. So basically, we want you to give us an explanation or what mechanism do you put in place in terms of addressing these high-risk areas, because they are concerned about the high volume of cash transaction, the risk involved, and also issue of theft in it. And then they went further that no document policy procedures on dock workers loan. It means that there is no documentation, there is no policy guideline to guide you as per the remuneration of dock workers. And we want you to say that on that. Yes. And also, it's been also noted that there is no collateral that will be tendered to GPA in terms of if they haven't got, I mean, if they take this loan and then they are not able to pay it, where do you bank on to make sure that they pay these monies? So these are all internal checks. We want you to respond on those issues. Thank you.
I guess the MD will respond.
Thank you, Honorable Vice Chair. To respond to the issue about the non-provision of joint comprehensive insurance for staff vehicle loan, management has noted the concerns of the auditors and has put in place mechanisms to ensure that insurance that are not in the joint cover, the name of the GPA and the staff, because there are allowances that are paid, the allowances will be withheld as a control measure. So that is now in place. With regards to the dock workers, because of the category of workers that are engaged and the frequency of engagement, and the nature of their payment, it has been difficult over the years to get them to all open bank accounts for their payments to be made through the banks. And for the loans without collateral, there's been some improvement because, for example, the vehicle loans, they carry joint insurance in the name of the GPA and the dock worker in particular. For building loans, they are mortgage, and the mortgages are held at the GPA until the loan is liquidated. For things like personal loans, there's an amount that is pegged, and it is depending on the average wage rate that they would attract over a 6-month period to ensure that the deductions are within the period. Now, there is a category of workers that are not permanent staff. They are engaged as and when vessels arrive. And because of the nature of the workforce involved, it has been challenging over the years to get them to open individual bank accounts. But what management has done lately is the scheme has been transformed. The old dock worker scheme has been abolished, so to speak, because all the workers on the register have been severed through a negotiated settlement with the GPA. So now a new company has been set up as a private stevedore cargo handling company, where the workers hold 50% shares and the GPA holds 50% shares to manage a transition over a 3-year period. Once the company is fully up and running, then the GPA will withdraw. So now this new company, they are going to make sure that there's proper recruitment processes in place, proper deployment, and also remuneration, which has not been easy to achieve because of the history behind the establishment of the dock force. So that has been the challenge generally. But if in the unlikely event a worker were to leave the scheme, and then the GPA is exposed in terms of non-recovery of outstanding balances, for the buildings, there is a mortgage. For vehicle loans, there is this arrangement between management and the workers that they are allowed to be engaged on particular vessels over a period until such time that the monies are recovered, and then they will now be removed from the register. It has been a challenge, but we are aware, but management has thought that because of the history behind these dock workers, the most sustainable way to solve all these problems is to have them transition into a new arrangement, which is now in place. Thank you.
Chairman, now that there's a new arrangement in place to transit them from the old to the new one now, what is the fate of people who has already secured loan already and they might be disposed out of their job and there's a new arrangement now? What mechanism or control mechanism do you have in place to get those monies? Yes.
Okay. Thank you, Honorable. The severance package was negotiated with the unions, and the amounts that are paid to individual workers is net of their liabilities. So all the liabilities are recovered, and then they are given the net amount. So nobody is going with any liability. All the loans have been recovered from the payment.
Mr. Chairman, do you have a documented policy as at now? Yeah, for loans of dock workers.
Yes, there's a policy. There's a policy in management when it comes to according them building loans, and when it comes to according them vehicle loans. But the special loans is one. There's no written policy, but there's a practice in forms of a documentary process that is in place, where individual workers will have to apply, and then their average earnings are checked against to ensure affordability of any amount, and then the amount, there's a threshold that no individual will be.
Wow. Yep. So come up.
No individual will be given more than $20,000 at any point in time to ensure fast recovery. But if in the event one of the workers needs a special loan, always one member from the scheme, the register, like a colleague, would have to come and sign on the form as guarantor. In the event of default, then there's somebody who will step in to make good the amounts that are due and liable to be paid. But for permanent pensionable staff, there's a loan policy guideline.
Okay. Yeah.
Come on.
Yeah. Mr. Chair, don't you think allowing a staff to come and guarantee a staff on loan would be a little bit risky? Because if the person taking the loan has defaulted, the other one also has defaulted, you know that you are losing 2 staff from your institution, perhaps. You might automatically lose those 2 staffs. So why not you use their guarantors who guaranteed them when taking a job? You know, so that would not be detrimental somewhere else again. That's my suggestion. But if you use your staff to guarantee their colleagues' staffs in taking loan, in case they defaulted and their colleagues also defaulted, you are holding on 2 necks now from your institution. And that might take into losing 2 staffs. So thank you very much.
Thank you, Honorable. That's a very valid consideration. But in the past, because now they are transited into a new system, those risks would no more be there now. But in the past, what has happened is management has had the practice of having an arrangement with the dock workers. In the event one is indisposed and there's a liability, they are allowed to be recruited still, such that if there's any payments that are due, the dependents would benefit from the payments that are due, but then the loans that are liable will be recovered. That has been the arrangement. And we've not had the incident where people will leave the scheme without the liability being offset. And these are not permanent staff, they were just casual workers. Thank you.
Chairman. Yeah, and you said that you have a caveat, sort of, like a limitation in terms of loan. And then in the books here, want you to explain why the building loan of 215,000. And a special loan of 215,000. And yes, 215,000, $280, and a special loan as well. Can you explain vis-a-vis what you just provided to us, that you have a caveat in terms of what you can have as a loan? Yeah.
Yes, thank you, Honorable. The caveat I mentioned was referring to only special loan, which has a threshold of 20,000. But for building loans, normally it's depending on the offer that is available from the estate agencies, and where loan amounts include the cost of the property and also some cash amount that is given as advance to assist in the construction of dwelling houses. That's how the amounts vary. But we have had amounts up to $375,000, which is the highest that we've given to as building loan. But the special loan is the one that has a threshold of not allowing any individual to take more than 20,000. In the past, some amounts have been given, and they were in excess of 75,000 as classified as a special loan. Maybe some of these figures that are quoted as beyond 50,000 might have been one of those instances. But recently, it has been implemented, and it's only 20,000 that they are eligible for as only a special loan.
It's a special loan, and it is up to $215,280, and it's a special loan. If you look at the table below, the second column, it's a special loan. And when you have a caveat of 20,000, this is up to 200,000, 215,000.
Yes, Honorable, I'm aware. As I mentioned, in the past, there have been amounts that were given in excess of 75,000 even, and classified as special loan. What I can remember, having known what happens at the administration, workers have had to come to the management to appeal that some of them maybe had issues relating to NAWEC water connection in their homes. So they would bring these bills and these invoices, and management could only classify it as special loan because they are not entitled to any other loan apart from building, the vehicle loan, and the vehicle loan is limited to only one category of dock workers, not the whole workforce. So that has been the practice, and these special loans may have been as a result of that, and they were treated as a special case. But the rule is generally 20,000 is what is the special loan.
Okay, so is it okay that you are in violation of your own policy? You've made a caveat, you did a caveat, and you are giving more than that.
Yes, thank you, Honorable. If you look at the history of this debt, they are not recent. They may have been in the past. Yeah. But this threshold is something that evolved recently.
When? Which year was that?
As far as I remember, 2018.
2018.
What this is specifically talking about 2020 reports.
Yeah.
And we don't expect 2018 to be here.
Yes, as at the time of reporting, maybe this may have been the balance outstanding from the loan. So the amount, I presume, may have been even more than what is stated here.
So is it that this has been dragging over the years or what?
Certainly, Honorable.
And what are you doing now
The status.
All these amounts are now recovered.
All
the
of them.
status right now?
Yes, all of them are recovered because they have now transited into a new arrangement.
Okay.
Now, the issue here is like you are now transitioning the issue of dock workers. Do you have any intention to come out with a clear-cut strategy, to come out with a clear policy, taking care of every type of loan, even the dock workers?
Yes, certainly, because this new company is arranged such that workers have shares in the company.
Okay.
So we have a setup where there's a board of directors in which the unions, they have 3 members representing them, and then 3 from the GPA management, and then 1 independent chairman. So the board is going to be responsible to manage the new setup, and it's registered as a limited liability company. It's called Dock Labor Company, Gambia Limited. So our expectation is the company will be run on strictly administrative and established governance structures, and not like what happened in the past. So that's why we decided to transition and have a new setup that will be purely run on established governance structures.
And how are they related to GPA?
We hold shares in the new company on a 50% equity, and the unions hold 50%. And the idea is to have the company run for the next 3 years. So once it is sustainably being managed, the GPA would eventually withdraw and then maybe sell its shares either to the workers or to any private sector, so that the port will concentrate on its core operations. And this stevedoring labor would be privatized totally.
Okay, Chairman,
Let's move forward.
Director, right? Okay. Yeah.
Maybe, sorry, if I can just
This one, okay.
supplement a little bit in terms of where we are now. Because stevedoring labor is supposed to be competitive. This transitioning is just temporary. In fact, we were going to permit others to set up stevedoring labor companies so that there could be competition, because for us to remain competitive, we have to be able to deliver these services at a reasonable cost, rather than what was happening in the past, because that's the best practice. But to start with, we had to deal with hiving them off the books of the GPA. That's why we went through this interim arrangement with 50-50 equity, and that 50%, like we said, we're going to dispose of. As soon as we have an interested independent person who wants to invest in that service, we'll just hand it over. That's the idea. So we may have 2 or 3, because there are issues. I think you've seen the audit that came out of the audit department regarding cargo. So this response is part of that bigger deal.
Okay.
And I should also add something with regards to the loans. That also, it is sorted out in the sense that what we were told was that if they were a union, they were a member of a union, so they had a joint, they all guarantee each other. But that was not acceptable. So what we had said is that,